The market reaction to the UK's triggering of Article 50 and the kickoff of Brexit negotiations has been very positive so far. And most importantly of all, the pound is starting to do really well compared to the euro. Traders are starting to think of Brexit as being a relative positive for the United Kingdom. As we move into this, people are voting with their money, and that's what they're starting to show. I'm going to start off by looking at the chart of the pound against the US dollar. It had sold off dramatically following the initial Brexit vote back in June and had been trending lower, but since the October, we've seen a really strong base forming in the pound. We've got, you could call this a triple bottom, you can call this a head and shoulders bottom. You've got a neckline here up around 126.85, close to the 200-day moving average, but overall, things are starting to look up. We've got a higher low here in mid-March. We've had a nice acceleration on the retest, another higher low here coming in about 123.50, and we're seeing cables starting to rally up off that. Even more importantly, also here, once we retook 50 on the RSI, it's been holding above it, a sign of upward momentum building. Now we've got cable trading back above 125, and overall things have been looking positive. Even this last little tumble here just before the Article 50 announcement didn't get very far, totally contained near the 50-day average. Things are starting to come back under accumulation for the pound against the US dollar, and that's important because we're seeing the opposite effect also happening in the UK 100 in the FTSE. This when the pound came down, a lot of the big UK multinationals suddenly got a lot cheaper relative to their peers, and because of this, we saw the UK stocks absolutely explode to the upside. And on top of that, the UK economy has done very well, with benefiting from the lower pound since the Brexit vote. So what are we seeing here now? Just as we're seeing the pound forming a big base, we're starting to see the UK stocks forming a sizable top, mirroring each other. This is to be expected. So here in March, we've had near 7,400, a left shoulder at the beginning of March, a right shoulder forming over the last couple of days, with a head in the middle near 7,440. These new highs made by the index were not confirmed by the RSI. We're seeing lower highs. That's an indication of slowing upward momentum and the potential for a correction. So first test we're watching here for the UK 100, 73.35 is this uptrend line here, and then the neckline of the head and shoulders top, which is here near 72.60. So if we see UK stocks rolling over and the pound starting to recover, that's a sign that we're seeing the previous worries and concern about Brexit unraveling and confidence coming back into the UK. As strong as the technical action in the pound has been relative to the US dollar, even more important is how the pound has been outperforming the euro over the last few days. After the Brexit vote, the euro exploded in value upwards relative to the pound. People thought that the Brexit would mean the UK was in big trouble and that the EU would come out way on top, and that's just, nowadays we're seeing traders are thinking that's not the case, and despite all the talk that's coming out of the European Union claiming that the Brexit's going to be better for them, that simply traders' action is saying that's simply not the case. If we look here at the euro relative to the pound, since October, the euro has generally been trending lower against the pound. We're seeing a series of consistently lower highs each time it pushes upwards. This is a sign of the pound strengthening. The other thing is that we were seeing that a previous uptrend in momentum for the euro against the pound is now breaking. With this euro pound here, the RSI is breaking 50. Now it's breaking an uptrend line. This is a sign that sterling is strengthening relative to the euro. Most importantly, we're seeing it here, where this 86.60 level that had been support has become resistance, and on top of that, we are seeing a big red candle here, definitely a decisive turn downward for euro pound. This is a turn upward for sterling, and most important of all is we're looking here at the 50-day about to cross below the 200-day moving average. This is would be what's known as a death cross. It's a very significant technical signal that says the pound is starting to outperform relative to the euro. Traders are thinking that Brexit should be better for the UK than for the EU, and going forward, as we're now awaiting the response letter from the EU, and as we start to see more conversations take place over the coming weeks, we may continue to see the euro and the pound quite active relative to each other.